Howdy, folks. Welcome to another episode of the Reseller Niche podcast. Russ is in the chat today. He's not on camera, but he's going to be in answering questions and helping us with that. But today, I thought we'd do kind of a, how would I describe this? This is a healthcare related show. We have some business professionals with us that are going to be talking about how self-employed people, entrepreneurs, business owners can, secure and figure out how to get into healthcare for themselves. And I know I have a lot of questions about how, because I will be going full-time into reselling 3 to 6 months. That's my goal. And I know there's a lot of questions about that, those constant changes in the market. So I'm going to stop talking for a second, and I'm going to let our two guests introduce themselves really fast. And go ahead, Neil.
Yeah, hello. So let me introduce myself here. My name is Neil Hamady, and I have been in the health industry for over 10 years. I've had the great privilege and opportunity of helping online resellers and corporations, individuals, and families guide them, I would say, in their choice of health plans, advising them on the direction of the health industry, and making sure they choose the plan within their budget and also in a very creative way. This has been quite of a challenging era the last few years, that the health industry has taken so many twists and turns, and it's becoming more and more complex as we go forward. And now I will let Dee Mershady introduce himself.
Good afternoon, everyone, and thank you, Mo and Russ, for having us on the show. First, I have to tell you that I've been looking forward to really coming back on your show. I know you had my wife and I on the show some time back, and we're avid sellers of online, and we love doing business online. And ever since being on your show, I've always wanted to come back and somehow participate, but also bring quality and some other things to your show that helps your listeners. And so it's a great opportunity to be here with you and to bring my good friend Neil to really share something that's important for all of us who are doing business online. And that's really understanding how the healthcare affects us in our business and how we can take advantage of it. So it's an honor for me to be with all of you guys, and we'll let Mr. Neil kind of educate us on whatever questions everybody may have.
Yeah, and just Dee was probably, I believe, show number 2 or 3. And Miriam and Dee actually were Amazon private label sellers. So they were, the previous time we had them on, they were talking about the private label product they had and how they restarted. They had zero experience. So if you want to check that out, that's one of our earlier episodes. So Dee and Neil, he was nice enough to introduce us to Neil. And we're going to ask him a few questions, just basic stuff, basically about, as resellers, we don't have that backup of maybe a company umbrella where they provide, the 401k with healthcare and other benefits and so forth. So I guess, Neil, if we could start with, let's just say I'm starting out by myself, brand new online business. I sell on eBay and I have no healthcare benefits. I have no, other way of getting it. My wife, no military, nothing that would help me get that. What's the first thing? What's the first step that I would take to securing healthcare?
Well, it's very important to note that the last few years with the Affordable Care Act, there were many changes, and the changes and the windows of enrollment has been kind of squeezed down quite a bit. So the first thing you do is to be aware of the fact that not only the changes in the health plan choices, but also the cost is becoming more and more, prohibitively expensive to a lot of us. But the thing is, when you're a business on your own, the thing what really goes to your advantage is that you have the opportunity to deduct a lot of the expenses, correct? So what the industry, for example, if you are in California or you're in Nevada or any other state, they have what we call the exchanges. The exchanges are based on the Affordable Care Act, where based on your income, they will help you. They will subsidize part of the cost, but there's a table of income. You have to be within that table. If you are outside, then you pay completely market price, which is getting to be very, very expensive. But bear in mind that there's an opportunity for you to enroll, and the opportunity in many of the states is between November 1st to about December 15th. In California, it goes out to January 31st. But in many states and across the United States, it's for.
Let me cut you off right there really fast, just because I'm luckily right now I have healthcare through my wife, but this is something I will be doing, like I said, in the next 3-6 months. When you said those dates there, where am I going to, find that paperwork? Find that.
That's a very good. That's a very good question. It's a very good question. Actually, in a few ways, you go on the government webpage that tells you where to go, and I can guide you. I can send you the link where to go. For example, if you are in a different state, in California, you go to the coveredcalifornia.com. Nevada has its own exchanges, but I can guide you and send you all the information that you need based on your state. And you go in there, you have the choice also to either do it on your own, but I would recommend that you do it for an agent, a certified agent within that state that has a resident license that will communicate with you, that will ask you questions, and you have to share with them information about your family, if you're on your own, what have you. And so they all they can use the plan that fits your needs.
I think we lost you there for a second. I got you to the point of where I lost it, where you said somebody would be assigned to us.
Yeah, it's not an assignment, but you'll be able to choose. You go online, and there's I would say a menu, a drop-down menu where it says agents, locating agents. Then you locate. You say, I am in the city of for example, I am in Philadelphia, and you say okay, and then they give you a list of agents that you can call, and then you call these agents, and they'll walk you through it. Instead of you doing it on your own, because it can be really, really difficult and challenging. And there are a lot of questions that they ask. You have to submit at that point in time. If you do it through the exchange, you have to submit your IRS return to confirm that you're a resident of that state. That also sometimes some pay stubs that gives you some history of income. So they see that you're not only a resident, but you making the money that you're claiming. Now, then they'll help you. They'll walk you through it. Now, remember, if you underestimate, if you're working on your own, such as online resellers, you don't know how much you're going to be making. But what you do is that you approximate. You say, I'm going to make around that figure, right? But bear in mind, and as you go and then your income increases beyond that limit, you have to let your agent or you update that information. Otherwise, if you are lowballing it, at the end of the day, when you're filing your IRS returns, you're going to pay a certain penalty, which is the difference between what you are paying and what you should be paying.
Okay. I mean, just so I can kind of because I know you mentioned there's certain levels. If we could just throw out an arbitrary number, say, I don't know. And I'm assuming these are gross numbers you're talking about. So how does that work? Say if I make, let's say, $50,000 in a year.
That's a good question.
Yeah.
That's a very good question. So in the United States of America, there's a table based on income, right?
Yeah.
And on how many members of the family you have, right?
Okay.
All right. So based on income, if let's say you're on your own, all right. So it's 138% of federal poverty level, which translates into 16,250. This is the lower norm. The upper limit is going to be almost, let's say, $55,000 or $60,000. This is for one person, and that table goes depending on and they divide it into like 138% of federal poverty level, which is 16,000, to the next limit, which is 150. It goes up to 22,000, so on and so forth, to up to 400% of federal poverty. The federal poverty level is about $12,000 or $13,000. So at 138% of federal poverty level, that's the lower limit when you can get into the exchange and then get assistance. As soon as you hit the 400% and beyond, you no longer get the assistance from the state. So now you're paying market price.
Okay, you got ahead of me a little bit there. So I just want to make sure that I'm understanding. And actually, one thing I just want to preface this, that Neil actually has a financial background. I don't. So he's talking from experience here. So I know usually when we talk to people, we say, we're not accountants, we're not financial. He actually is an advisor. So he's, capable of talking about these types of things. But I just want to clarify, because you were talking about percentages there.
Income.
Yeah. So that was those gross numbers, is those family based on?
That's a very good question. No, truly, because if you have a business, then you are mainly a 1099, right? So you're a 1099. You're not a W-2. You're not an employee. So you look at your adjusted gross income after business expenses. This is the income that you need to kind of look at, not the gross. Unless you are a W-2, you're an employee, then you look at the gross because you cannot deduct your expenses, right? Gotcha. But because, we're businesses, online resellers or what have you, you look at the adjusted gross income. That's exactly it.
Got it. And that number you were talking about, so what would be the lowest bracket, I guess? So because I'm trying to figure out, if I'm just starting out, my income might not be very high or might not even be there yet. So these are kind of estimates. For example, a lot of people genre, and when they start reselling, they either make minimal amounts or very little. So maybe when I said 50,000, that might be by the end of the year. So is that an estimate? So I estimate when I sign up for the insurance that I'm going to make roughly X amounts, and that's how I sign up for it.
Now, remember, when you're doing it through the exchange, although, for example, your wife or your husband, depending who is the one who's doing the reselling online, has her own business, you enter both or the whole family, even though part of the family is not going to get the coverage. Maybe they're getting the coverage to an employer, but they have to know how many members of the family, so they give you assistance commensurate of the numbers of family members, right? Because if there's making 50,000 and you're on your own, you're going to pay a higher premium than if you're 50,000 and you have 3 people in your household. They take into consideration that, and then they will kind of find a way to adjust it. So yeah.
Oh, okay. So this is like you mentioned covered California or whatever state you might be living in.
Yeah, whatever state.
And then when you get to that, when you start deciding, do they allocate? I mean, because I know with my wife's insurance, they give her 2 or 3 options, like different, like Kaiser, and there's a few other companies they'll let. Is that something that somebody applying this way will have the opportunity to pick from?
Yes, exactly. So there are every state and sometimes every county. Actually, these days it's county by county, not just state, also wide. There are some carriers that are doing business in that specific county. And when you get into the state exchange, you put also your address and your zip code, and immediately to tell you the carriers that are doing business in that specific county. And then there are many Kaiser or Blue Cross or Blue Shield or Humana, depending where you're at, or United Healthcare, so on and so forth. And then you can choose among one of these carriers to enroll in these carriers. Now, mainly there are 4 tiers of coverage. The first tier is called the bronze. Whether it's Blue Shield or Humana or United or what have you, under that umbrella, they create different products, and the products can be bronze, silver, gold, and platinum, right? Okay. And it can be also catastrophic coverage for very young people who have accident health or under the age of maybe 22, 25. And then you can choose based on your, your budget and also, your age or what have you.
Okay. And then I do have a question in the chat. It's a slight segue, but I think it's pertinent. It says, Neil, is there such a thing as cap disaster insurance? Something that would make it where after a certain amount, I couldn't be charged anymore?
Yeah, there's always like that. So now we're getting into the details. Let's say you chose a carrier like Humana, right? And you are in Florida. And and then there are 4 things in health insurance that you have to kind of always be aware of. One, it's called the deductible. Second, the maximum out of pocket. I'm going to go through their definition. The third is the co-payment. And the fourth is the co-insurance. These are the 4 elements are very important to know. The deductible is mainly the first thing you pay before the insurance covers you.
Okay.
All right. Almost, not always, but almost always. The second one is the maximum out of pocket. Now, don't mix the deductible with the maximum out of pocket. The maximum out of pocket is a stop loss. Let's say I go to the doctor and I make a co-payment, which is a flat dollar amount. Let's say $20. Or I make a co-insurance payment, which is a percentage of services rendered, which is co-insurance. Okay. All of these expenses are accounted for during that period of time, during that calendar year. If they reach the maximum out of pocket, let's say $5,000, within that year, every penny thereafter, within that year, is covered 100% by the insurance company. And so that's the stop loss. And like I said earlier, the bronze might have $6,000, $7,000. Maximum out of pocket. The silver might have $2,500. The gold has zero, has maybe $2,000. But when you go from the bronze to the platinum, your premium goes up too.
Gotcha.
Especially if you're not getting assistance or if the assistance is small. Okay. So there are a lot of details there, but it would be best at that point in time to really get involved with a certified agent that will walk you through it. Absolutely. Because it can bog you down in numbers and technicalities.
Gotcha. Actually, you brought up a key point right there that I was thinking about, because my wife and I, we're probably going to be transitioning from like hers is regular 9-to-5 normal employee. So when someone transitions like that and they have healthcare, I've heard the word COBRA thrown out there. Mm-hmm. So how does that work? Is it temporary? How do people transitioning?
That's a very good point. So what COBRA does is actually it extends when you leave your employer. You have approximately, it all depends. Sometimes they give you a year, sometimes 18 months, sometimes 2 years, but that's the maximum. The issue is when you leave an employer and you don't have another job, your income is going to go down drastically. And COBRA is going to charge you much more than if you were to do it within the exchange we talked about. Because they're going to charge you almost like full market price.
Gotcha.
Yeah, unless the husband or the wife, they still have a job and their income is so high that it doesn't really matter to them. So,
it goes back to the assessment of what you're going to be making.
Exactly. If you go through exchange and your income is over the 400% limit of federal poverty level, you're not going to get any assistance from the government. So sometimes the COBRA works well. But remember, the problem with the COBRA, it's a good thing if someone does not have any other coverage, but the problem with the COBRA, one, it's gonna terminate at one point, and you gotta know that when it terminates, you gotta be within your 60-day period. There's a 60-day window after any health plan terminates. You have a window of 60 days to enroll in any other plan. Otherwise, you'll be locked out for the remainder of the year. Oh, so there are a lot of technicalities, right?
And that's 60 days from, sorry to cut you off. When does that 60 days start? From the first day you're not employed?
When the insurance coverage terminates.
Gotcha.
Now, if you don't enroll in COBRA, you have a 60 days from your employer termination of coverage.
Okay.
If you go through COBRA, whenever COBRA terminates, you have 60 days.
Okay.
So it's always 60 days from the time you lose coverage.
Okay.
Yeah, but COBRA, then again, if your income goes lower than the 400% of federal poverty level, which can be For a family of 8 can be 140,000, but a family of 1 can be
Can we
maybe
break that
50,000.
number down? I mean, I think you've already said it once before. 400. What is that for? Say a couple, just 2 people, and then maybe one with 2 kids. What is that number roughly?
People, can you wait a second? I'm going to pull out a table for you.
Sure.
Yeah, no big deal. Just a second. I'll give you an idea now what it will be. And it is that's a very good question, because it really varies quite a bit. All righty. I'm going to open up here in 2018. So you have a family of 4. Your minimum, by the way, if you're making less than the 138%, I'm going to go through it just a second, but just give you an idea. If you're making below the 138%, if you are outside of California, they push you on to what we call Medicaid, which is very low income. In California, we call it Medi-Cal, which is Medicaid in California, right? So you have no choice. Unless you go outside the exchange directly to the carrier, you pay full market price. Some people do it, but it becomes very expensive if their income is very low, so they won't be able to afford it.
It sounds like it, yeah.
Yeah, so the 138% for 4 people is $33,948.
So you have to prove that you're going to be making more than that 33,000.
Equal or more.
Equal
or more, up to $98,400. For every penny after that, you pay market price. So when you cross that 98,400, that's it. You're going to be on your own and you're going to pay full price.
If I could ask you 2 more of those numbers, just so we know them. One for a single person and one for a couple.
For a single person, it's for $16,643. That's 138% of federal poverty level, right?
Okay.
And the maximum, this is for assistance, right?
Okay.
48,240. This is for individuals.
Gotcha.
For a family of 4, it's $33,948 up to $98,400.
Okay. And then let me ask you this, because this is an assessment based on future earnings, I'm guessing.
Yeah,
so,
exactly.
Is this based on your tax returns? Because you're no longer employed. How does that work?
Yes. So the way it works in the past, they changed it the last year or so. In the past, they used to average how much are you going to be making during the course of the year, even if you lose your job. Nowadays, things are changing. If someone, for example, is making $100,000 a year, and after 4 or 5 months they get laid off, or they lose their job, or they terminate themselves, and they want to do it on their own, this is when your income becomes 0, right? Now you can say I made $50,000, but you can also say that now I'm no longer making any money and I want to be on Medicaid. So they push you down on Medi-Cal or Medicaid. But you can also say, I'm still making the $50,000. You have a choice of either going through that, or you can say I'm making 0 money. But the moment you start making money, then you need to change it.
Because the way it works with this industry is, obviously when you start off, maybe no previous job anymore, no 9 to 5, and you're going to be making little to no income, or maybe a smaller income. That hopefully is going to increase. So let's just say on the bright side, you make more than that cap. You go over it. What happens then? Is that something you take care of next year when you sign up, or how does that work?
So during the course of the year, you have to really update your income if things change. So let's say I'm making 0 today and I say I want to be on Medicaid. Now, bear in mind, when you go on Medicaid or Medi-Cal, you cannot, not every doctor or every clinic accepts Medicaid or Medi-Cal. So most of the time it's the county doctors and hospitals and what have you. And some people can live with it because, you don't have an income. But as your income grows, you're going to update it and you're going to see, let's say now I'm Medicaid, but 3 months down the road, oh my God, I already made $40,000. I got to switch, because if you don't switch, they're going to penalize you at the end of the year. So you got to take care of it as you go. And you're going to let your certified agent or yourself, if you are kind of prolific in making that complex application. I'm telling you, they make it a little bit more complicated than it should, to let them know so they're updated, because you don't want to get this big balloon payment at the end of the year. Listen, don't think that it doesn't happen. It happened to me because at one point, I was projecting a certain amount, and I had a big project that I was working on, and at the end, I paid. They call it a penalty. It's not a penalty. Actually, it's the difference between what I am paying today when I should have been paying all along. All right. So I had to pay it. But it's better to keep track of it as much as possible if you can.
So this kind of reminds me, and I'm no accountant, so I'm just saying what I'm thinking, but it reminds me of, as business owners, we have to keep track of state, if you have taxes in your state, and we pay quarterly, at least in California we do. So we have to keep track of that and then hopefully pay that. So let's just say I'm really, really bad with keeping up with things. I don't keep up with anything, and I go from being within that bracket to going above it. What happens at the end of the year? What kind of percentage penalty am I looking at? Worst case scenario.
And you don't keep track of it, right? Yeah. Well, you know what? Then it goes. Let's say you got over that 400% that we talked about.
Yeah.
Then it boils down. See, one thing to bear in mind also, age has a lot to do with it. Like a 60-year-old, right, is paying much more than a 30-year-old, right?
That's terrible, but okay.
It is unfortunate because the closer you are to your retirement, the more you're going to be paying, which should be the opposite, right? But, insurance companies work in this fashion. It's a mortality thing, right? Actuarially, you're going to look at the mortality rate of potential of one who's 60 is much higher than the one that's 30, right?
That's true. Yeah. That is true.
Yeah. So what happens is that you say, I'm not keeping track. And then your accountant is going to tell you how much you're going to be paying as difference, or what we call quote unquote a penalty. Yeah. It's very difficult. It's almost impossible to predict unless we know your income and also the specific situation you're in.
Yep. Just want to stress, we aren't accountants, so this is just a hypothetical situation. Please check with your accountants.
Exactly. For taxes and everything else. And on your business on your own also, and depending on how high your income is, there are many ways of reducing some of your tax responsibilities.
Okay. So let's talk about the less scary things. Let's just say you've signed up for healthcare, and then you're possibly expecting a new child in between that year. How does that work with updating? Is it similar to updating your income, or how does that work?
Well, you're asking very good questions, because these are really what we call qualifying events. So before the child is born, if you don't have any insurance and you're stuck unless it's between November 1st and December 15th. But the moment the child is born, this is when the clock ticks as far as a qualifying event or a qualifying window of opportunity for you to enroll in any plan. So they give you 60 days from that day. So the 60-day period is kind of very critical, no matter what. It's 60 days, right? I don't understand why they chose 60, not 90, but 60 days is now what we have. So you have the opportunity to enroll, if you haven't enrolled, you and your family, or to add your newborn. And at the same time, you have the opportunity, if you're already in a plan, to choose to switch plans that make sense to you. So they give you that opportunity and that flexibility. Yeah.
Okay. So I'm going to change directions a little bit, because there's a lot of talk in the last 2 years about Obamacare, how that affects. And then at the beginning of when we were filing our taxes, I think I have a few people in my family that said that they had to file an additional form. So I guess, first of all, what is Obamacare? And then second of all, how do we enroll in that? And we'll go on from there.
Sure. So Obamacare is called the Affordable Care Act. It should have never been called Obamacare. Okay. But it was politicized to call it Obamacare, but it's actually the Affordable Care Act. The Affordable Care Act, in the beginning, the notion of it, I'm apolitical. I'm not political at all, as you
Same here.
See, we're here to kind of share the truth about certain things, and it's about misconceptions. Well, the health industry was going, uncontrollably high. I know a lot of people don't realize that unless you are a business of your own, businessman on your own, you own your own business, then you could have seen the impact of how much it was costing at that point in time.
Yeah.
There was a compromise at that in 2010, and they said, listen, now instead of making it kind of the government takes care of everybody, let's make it semi-private, right? So now the insurance company is going to charge the government or the state or the individual 100% of that price, but the state is going to help towards that premium on a monthly basis.
Gotcha.
And that's the concept behind it. Not only that, pre-existing condition is waived. In the past, if you had a kidney stone, they have the right to deny you or to increase your rate.
Gotcha.
Right? The maximum, there was also a limit on the maximum, lifetime maximum. It used to be $1 million, $2 million. Now it's unlimited, which is good for us.
Okay, excellent.
Right? Yes. The problem with it, though, that the insurance companies and carriers took advantage of it and start raising their premiums, and the state were kind of victims of that price hike. And so now they're trying to manage it, and it's becoming very difficult.
Gotcha.
But I foresee that the Affordable Care Act eventually would be tweaked because there are a lot of holes in it. And depending on the states, in California, they're talking about a single payer system. You never know if it's going to be a reality or not, but it will definitely be tweaked to hopefully to the benefit of all of us as business owners.
Okay, so then is there a difference between coming in as a business owner with the Affordable Care Act as opposed to, because from what I heard, and I don't quote me on it because it's just, there were certain premiums as a business owner that you would have to pay if you say you had employees and so forth.
Yeah.
Are there certain things we should watch out for as business owners, I should say?
Yeah, definitely so. So just to give you an idea, now as business owners, you got to look at what your projected, revenue is going to be, right?
Okay.
Now, if you have employees, it becomes a different kind of a structure. But
Gotcha.
I'm going to cover both briefly, kind of summarize it. On your own, we already went through that discussion of what you need to do and so on. As a business owner, once you make over a certain limit, we can maybe another time talk about how you're going to avoid, self-employment taxes and
Sure.
so on and so forth. And you have your adjusted gross income. There are many ways. But if you have employees, you can choose if you want to cover your employees or not. Now, you cannot just pay your employee on a monthly basis toward their premiums, and then they can in turn have their own individual enrollment. It is illegal now. It used to be legal 2-3 years ago. It's illegal for you to help them out unless you create a group plan. That group plan, like corporation group plans, then the minimum you have to contribute is 50% towards that employee. You cannot create a group plan on your own. You cannot create a group plan with you and your wife if you're in business together. It has to be at least one person, 2 people, at least 2, and one of them cannot be related by blood to the owner of the company. And then you create a group plan. The group plan is different than the individual plan, right? So they are widely accepted, and then they are much more, of course. Then also as a business owner, you have to contribute at least 50% of that cost, at least. But sometimes it's good for retention. It's good business.
Okay.
Yeah.
Okay. Yeah, I didn't want to get too much into that, but I know a lot of resellers and people that sell on eBay, Amazon, they have corporations and so forth. So, I guess setting that up, is that group plan built more for, because I know you can have a corporation, and again, we're not financial advisors at all. I just want to stress that. But is it something that I'd say people with more employees look for to set up as opposed to the individual plan?
If you don't mind repeating the question, because you we couldn't hear you for a moment.
Okay, sorry about that. No, I was just talking about people with corporations. Is that generally when we a lot of business owners have corporations, is that generally the way they go? They set up a group plan as opposed to an individual plan, or is that more based on the amount of people that are working?
Well, the group plan is actually, when you're looking at group plans, they take into consideration the zip code. Someone can live, if you have an employee who lives out of state, they can be covered also within the group plan. But you look at the age, right? You look at also the zip code, but they don't look at the income at all. With group plans, it's just the age and also the zip code. That's it. And then they give you a certain premium. But there are much more choices, and they're widely accepted in many institutions, right? For the group plans, I'm saying, compared to individuals. Yeah.
And then let's, I guess, go back to picking a plan. Are there certain things that, as a business owner, you could take? I mean, I don't want to get into the tax side of things, but with healthcare, are there certain benefits you could take advantage of being a business owner specifically through healthcare? Or
yes, you can. I mean, there are a certain percentage, and then again, the accountant or the tax attorney would know much better than I do. Although we have a lot of knowledge on taxation, but it's better to ask experts who have really gotten all the certifications. Yes. So yeah, there are ways to deduct the premiums, right? Depending on the level of premium. Yes, and that can benefit the business owner.
Okay. And then I just wanted to touch on a little bit, because we talked about age a little bit. Let's just say you were above the 60-year, because we talked about being 60, below or approaching 60. Are there different, because you talked about Medicare, are there different things we should look for at that age bracket?
Yes, definitely. I mean, I'm also a Medicare specialist. So just to give you an idea, Medicare is for people who are normally, there are two types of people that get on Medicare. People at 65 and over, and at the same time, people who have been on disability for 24 consecutive months. The 25th month, they qualify for Medicare. They don't need to be 65, they can be 25, right? It's a certain disability. When you get on Medicare, there are a lot of benefits on Medicare. So Medicare, the federal government, or the Centers of Medicare and Medicaid Services, CMS we call it, give you an opportunity to enroll in a Medicare plan. However, if you work 10 years and 40 quarters in the US, and most of us have done that, there are two parts for Medicare. There's Part A, which is hospitalization, and Part B, as in boy, which is for medical. Now, Part A and Part B. Part A, you get it for free or zero because you have worked 10 years and 40 quarters. The Part B, there's a premium to it. Normally, now, if someone turns 65 today, it's $134 a month for Part B premium. Now, it's a good foundation for people, but it's not comprehensive. So that's the reason why the federal government has contracted with insurance carriers, and the Medicare plans are very, very different than the individual and the family and the group plans, because they are controlled and supervised by Medicare, and they hold these carriers responsible and accountable for a lot of things. There are a lot of laws. If you're able as an agent to enroll people in health plan outside of Medicare, you need the Department of Insurance license. But if you need to get into Medicare, you have to get your certification, and it takes about 100 plus hours to recertify every single year to be able to talk about that. Yeah, so now they create two plans. In addition to $134 that you have to pay every month, there are a couple of routes that you can take. One is called the HMO route, which is Medicare Advantage plan. And then the other route called Medigap, which is any doctor, any hospital, any clinic in the US that accepts Medicare, you can go to them. So there's difference in the two plans. One of them is less kind of expensive. The other one is more, but it gives you more flexibility, right? Yeah. But if anyone has a question about in regards to their family, their parents, their friends, and their network of people, please, feel free to let us know. We'll be more than happy to guide you.
Yeah, actually, I think what I'm going to do, actually, we'll probably have Neil come back on because I have a lot of other questions, but I was talking, Roman Pickers Russ in the chat was just talking about how if we segue into Medicare and all the details, I'm asking a lot of detailing, we could really go off. So what I'm going to do is I have all of Neil's information in the show notes, and I'm going to have his, all his contact info. If you have any questions for him at all, and I'm going to give him a couple minutes now to tell people how they can reach him. Sure. And the best ways to do that. Go ahead, Neil.
So you can reach me by calling me on my cell phone, and I say 24/7, 7 days a week, 365. Actually, I love this industry. I'm also a financial advisor, but I love this industry, helping people, adding value at no cost to them when they talk to me. My phone number is 408-332-6227. Again, 408-332-6227. And my email address is N as in Nancy, and then my last name, H Henry A Alpha, M Michael A Alpha, D David, Y Yankee, N Hamady @gmail.com.
And we'll have that all below, so that way people won't have to. You don't have to write it down right now. It's all right below there, so it's all right there.
Okay.
So and then I just wanted to thank, and I know Dee's in the background there. Just wanted to thank Dee real fast. Thanks, Dee. And then I wanted to thank Neil, and then Russ in the chat too, and everybody watching. And what we're going to do is we're going to have Neil come back on because we have a lot more questions, and I think we're going to get a lot more questions because usually with the first show, people ask us things, so we can come back to you with those questions after the fact. So just wanted to say thank you for everyone watching on YouTube, everyone listening on iTunes. If you can leave us a review, that'd be great. For the Reseller Niche podcast, for Russ, myself, Dee, and Neil, just want to say thanks for watching. And you guys, until the next one, have a good one. Bye.
Thank you.